As we pass the midpoint of 2023, it's a good time to take a look at what's happened to our housing markets so far this year and consider what could happen in the second half of the year. And joining me today is Dr. Nicola Powell, Domain's Chief of Research and Economics, to discuss Domain's latest house price report. We're going to uncover the latest developments in property prices, demand and supply dynamics, regional disparities, and much more. So whether you're a prospective homebuyer looking for some valuable insights, a seasoned property investor seeking to navigate the market more confidently, or simply just curious about the current state of Australian real estate, I'm sure you're going to get some insights from my chat with Nicola. So let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
The big headlines from housing so far this year has been the resilience of our home prices. Even as mortgage rates have risen over the year, sales volumes have dropped. No matter what data you look at, those that called for a property market crash earlier this year and late last year, they've been wrong. In fact, the latest Domain house price report suggests that over the June quarter, combined capital city house prices rose almost 4 times faster than the previous quarter to produce the steepest gain since 2021. And boy, they were good times in property in 2021. And now our markets have recouped probably half of the value lost during the recent downturn. So to unpack their report, I'm joined today by Dr. Nicola Powell, Domain's Chief of Research and Economics. Hi, Nicola.
Hi, Michael. Thank you so much for having me on your podcast again. It's always a pleasure to talk with you about Australia's property market.
Well, if we go back last year, second half of last year, the Reserve Bank suggested house prices could plummet, maybe 15 to 20%. At the same time, the National Australia Bank forecast a 20% fall, Westpac forecast a 16% fall, ANZ thought property values would slump 18%. I guess they were concerned rising interest rates would stifle our property markets. But now all the banks have changed their views, the other economists have. In fact, just recently, the National Australia Bank changed its forecast, predicting a 4.7% rise in home values by the end of the year. That's right, after 9 months ago saying there was a 20% fall, now they're saying it's going to rise this year and next year. By the way, many markets have already surpassed that sort of growth. So we were talking just a second ago, Nicola, before we pressed record about we're all looking at the same data, but you actually can make data say almost anything you want. You need to have perspective, don't you?
This perspective is so important. And I think, how you read that data, how you pair it with other economic factors and other data sets to come to your conclusions is really, really important. And I think, you bring up some really great points there around some of those forecasts that we had seen, this time last year about the double-digit falls that could occur in our housing markets. Even at the time when you look at those types of forecasts, history tells us that has never happened before in terms of, seeing such a significant decline. We've done analysis before on price cycles, and it showcases that downturns are shorter and less severe. So we do see longer upswings and we see greater rates of growth. And I think that's exactly what we've seen this property cycle. And, there is an element, there are some differences, but there are lots of elements that there are similarities between all of these property cycles that we've seen over the last 30 years.
Well, I think in your position at Domain, you've not only got the data, but you've got the benefit of on-the-ground research and seeing what's happening in the various sub-markets, because there isn't one Australian property market, there isn't one Sydney or Melbourne property market. So you've got a wealth of data, and you've recently come out with your June 2023 house price report, showing us what's happened over the last quarter, and I guess over the first half of this year. So maybe you can give us an overview of the key findings, please, Nicola.
We saw about $60,000 being lost from the median house price during the downturn, and we've recouped about half of that. So we've seen about a $35,000 recovery in what was lost. So, this is a well-established recovery now. And what we're seeing, though, is our capital cities, and as you rightly said, there is no one single property market. We talk about our capital cities at that, citywide level, but even when you drill down, there's different dynamics going on in different suburbs. And even in a capital city level now, we've got slightly different stages of the property cycle. But what we saw over the June quarter is all of our capital city markets have moved into a recovery phase. That is apart from Canberra. But even Canberra now has found a price trough. It's holding steady at that price trough. And we've got two capital cities that have got record highs. And, this is Adelaide and Perth house prices are at an all-time high. And so it showcases that not every single capital city actually saw a downturn. Adelaide and Perth have really avoided any material downturn in house prices altogether.
That's interesting. So, again, the markets were more resilient than some expected, even though when you and I last spoke, we knew there was going to be a downturn, but didn't think it would be anywhere near as big as this, because as you say, the long-term trend is up, but in the middle we get these downturns. What do you think were the key drivers of the resilience of our housing markets this time round?
What you tend to see during a downturn, and this is a kind of a normal behavioural reaction that we see during a downturn, is sellers hold back. They sit on the sidelines, they wait to see how far property prices are going to fall. And, I do think that perhaps that was a stronger reaction this time round, because obviously we were seeing such significant increases in the cash rate and all of the other economic uncertainty, the rising costs of living, I think were weighing in on decisions. But what we saw really since spring of last year was a weak flow of new listings coming onto the market. And that has really been one of the fundamental things that has underpinned a pricing recovery. And that pricing recovery commenced firstly in our premium areas of Sydney and Melbourne. But now what we're seeing is that has actually rippled out into some of those kind of middle suburbs. And most areas now are seeing an increase in price. But there are other reasons. It has fundamentally been this mismatch between supply and demand. But it's other things like population growth has rebounded faster than anticipated. Obviously, we've seen blowout construction costs. The construction industry has such unprecedented headwinds, and we've seen that industry-wide slowdown. We've seen a drop in the number of new homes being built and generally higher construction costs overall. So that obviously also feeds into higher house prices. And I think as well, we've got very tight rental markets. What we could be seeing is some people actually fast-tracking their path to purchase because it's such a challenging rental market for a tenant. And what that might mean is some has just opted to purchase as soon as they are able to.
Yeah, lots of factors involved. Consumer confidence is one of the big things. And we found that buyer confidence increased before seller confidence did this cycle. But that's what normally happens. So buyers got in there, but sellers didn't. Now, interestingly, there are fewer properties available on the market. And some of those same commentators who suggested we're going to have a downturn that we didn't have are suggesting that when sellers come back onto market, they're going to flood the market, and that's going to create the market to drop again. I think what they forget, Nicola, is that in general, 70% of properties are sold to owner-occupiers. Most sellers are buyers and buyers are sellers. So in other words, if more sellers put their homes on the market, they're also going to be buyers out there as well. They're going to be the new buyers looking to move. Nicola, I see some challenging times ahead because there's going to remain a shortage of properties when, even though new properties are going to come up for sale, we're not creating enough stock. Our population is growing by about 2% per annum. You mentioned that already, this large number of people that have come into Australia, and they're not bringing homes with them, are they?
We just haven't built enough supply. And I think, when you look overall at the drop in the number of new homes being built, I think that is concerning, considering we have got this, flow back of people coming in from overseas. And I think, that is going to weigh in on housing demand, whether it's the rental market or the sales market. And, I love that phrase that you use, most buyers are sellers and sellers are buyers. It's so true. What we're starting to see now, though, in that terms of that supply and demand balance is some cities now are starting to see a better flow of new listings. And it's exactly what you said. We tend to find that buyers react first because they think, well, I want to buy while prices are still below what their peak is. that starts to then escalate price, and then it brings back sellers as well, because they go, right, it's a good time to sell my home. And it's precisely what we're seeing. And I think that persistent price recovery is bringing more sellers to market. When you look at some cities, so Sydney and Melbourne are one of the cities now that have got a better flow of new listings, and they're actually higher now than the 5-year average. And we agree with what you said. I mean, we're not expecting prices to pull back. What we're expecting, though, is, when you look at Sydney saw house prices bounce 5.3% in just 3 months, which is a significant rate of growth. What we're expecting, though, is a better balance between supply and demand. And so while we're expecting prices to rise, we're expecting them to rise at a slower rate than what we saw over the June quarter.
Now, that's good. I mean, I want property values to go up. I'm a landlord. I'm a property owner. Our clients are as well. But 5.3%, some people are going to look at those figures and multiply it by 4 and say Sydney's going to have 20% growth. No, you can't do that. But it's the beginning of a new cycle. At the upturn stage of the cycle, prices start to go up, and then supply comes on the market, so they don't go up as much. And there's an equilibrium, and eventually prices are going to keep going on. The boom is the end of the cycle. It's that shorter section at the end. So if we have boom time growth like that over the beginning of the cycle and it continues on, just going to mean we're going to have a short, sharp cycle. That's not what we want. So I agree with you. The markets are going to keep growing, but not as strongly. But Nicola, I see them as being fragmented also. There's houses, there's townhouses, there's apartments, those inner suburbs where people don't even have a mortgage. And recently, PEXA came out with the thought that about 30% of transactions occurring recently were without a mortgage. This is more established homeowners upgrading or downgrading. But there's also been people maybe on the fringes of our outer suburbs who have been suffering a bit more with the cost of living. The news keeps reminding us that we've got higher interest rates, higher fuel costs, higher electricity costs, increased cost of living. How has this affected our housing markets?
So you've really articulated that very well, Michael. And I think what we're starting to see, there's been lots of chatter around how are we seeing an increase in distressed sellers. And overall, when you look at that kind of macro picture and that citywide picture, no, we're not. And actually, when you look at Sydney, which is our highest priced capital city, which means, logically you need to be greater leverage to gain access to that market. Overall, we're seeing as a proportion of total listings, distressed listings have fallen every single month this year. But there are certain weak points. There are certain areas within our major capital cities that have got either higher levels of distressed listings or they're starting to see an increase in distressed sellers. And they are exactly where you would probably anticipate them being. It is in those more affordable suburbs, that kind of mortgage belt of Sydney in particular. It is those areas that are out west, outer southwest, Blacktown. All of these types of areas have started to see an increase in distressed listings. But I say that with the caveat of overall, they still remain very contained. And, while we've got this fixed rate cliff and it remains a risk, I think really to have such a negative impact on price, we would need to see a much broader based lift in distressed listings.
Well, for the property market to crash, you've got to actually have to sell your home, and there's nobody there to buy it. And so property prices plummet. But currently, with anyone who wants a job, having a job, with unemployment being low, with wages going up a little bit, even though if some people do have to sell, there's a queue of people looking at the moment. So I can't see property values crashing, even though in some areas they will go down a little bit. And we're not belittling the challenges that some people are experiencing. There's no doubt that many households are finding it tough at the moment with their mortgages going up or their rents going up and the cost of living going up. But currently they're paying their rents. There's not many distressed tenants there. And similarly, they're paying their mortgages. And in my mind, that's the real measure of mortgage stress. Are they paying their mortgages as opposed to is it costing them more? Again, those people who warned us about the fiscal cliff, again, the fixed rate cliff, I can't see that happening.
I can't see it happening in a broad-based scale where it has such a negative impact on property price. When you think about the home, I am sure everybody would sell the shirt off their back if it meant that they kept their home. We We adjust financially in other ways. And exactly what you said, it is challenging. And many households are now financially extremely stretched, particularly in the backdrop of higher costs of living. And those weak points, there are going to be weak points in our housing markets. And, that weakness is showing up in some of those more affordable areas. And that is totally understandable. We've also got to remember that we've got a big chunk of households that actually own their home outright as well. When you look at distressed listings in some of those premium suburbs in our major capital cities, distressed listings are literally negligible. There's barely any. So there's real diversity, I think, going on around people who are more financially stretched during this period of time than others.
Well, you said they'd sell their shirts off the back. I often use the expression they'd rather eat Maggi noodles than give up their homes. But the other thing is the banks don't want to take over their homes as mortgagees in possession. So while we're not here to give financial advice in this area, if you're struggling, speak to your mortgage broker, speak to your bank, just like during COVID where they helped people who are having trouble. They're prepared to do that again at the moment. Now, Nicola, clearly our housing markets are fragmented, as we said, and different states are performing differently, and we'll leave a link in the show notes to the report on Domain, your June quarterly house price report, where you go into a lot of detail about each state and about units and houses in each state. But can you quickly walk us through a bit of a state roundup and what's been happening?
Absolutely. So as you say, it is diverse across the different cities. And when you look at Sydney is certainly leading the price recovery. It's much further along its recovery than other capital cities. And roughly house prices have recovered about 2/3 of the value that was lost during the downturn. So in figure terms, house prices fell about 151,000 during 2022, and they've recouped about 97,000 of what was lost. So well established. And actually, it's the steepest quarterly gain since late 2021. And as you said earlier, we can remember 2021 as that boom time. But even units in Sydney, they've gained pace. The recovery has gained traction. They've recovered about 30,000, so about halfway into recovery, recovered about 30,000 of the 61,000 that was lost during the downturn. But units actually held up slightly stronger than house prices during the downturn. When you hop to Melbourne's slightly delayed in its property cycle, so Sydney is much further advanced. But we did see some positive outcomes in the Melbourne housing market. We started to see in the premium end of Melbourne's housing market early this year, it was starting to recover. But at a citywide level, it hadn't started to recover. But what we saw this quarter was growth. It's the first quarterly increase for house prices in a year and a half. So they are on the rise. Big turnaround from the 5 quarters of decline that they were recording previously. And even for unit prices in Melbourne, they are also rising. They increased over the June quarter. Again, a turnaround following 3 consecutive quarters of decline. So when you go to Brisbane is also one of those interesting markets. Look, and I find this stat really quite remarkable for Brisbane. I mean, you've been analysing property for a long time. You would have, lived through the period of time where Brisbane had higher levels of unit developments and really weighed in, didn't it, on unit prices. Brisbane is one of only 2 capital cities to currently have a record high unit price, which is just amazing.
It's a surprise, isn't it? When I saw that statistic, I was also surprised because Sydney started the trend of living in apartments long before the other capital cities did. Melbourne caught up. But in Brisbane, apartments haven't performed as well. And in fact, most people still prefer to live in houses. But yes, unit prices, because there isn't a lot of new stock in the Brisbane market, and I guess affordability is still going to affect some people in Brisbane.
I think the affordability angle, absolutely. We've seen unit prices in Brisbane now outperform house prices for 5 consecutive quarters. And I do think that is affordability. And, when you look at Brisbane house prices, they're definitely on the road to recovery. The downturn was really short and sharp. It lasted about 6 months, and we're now 6 months into a recovery for house prices. So they've recouped about 14,000 of the 47,000 that was lost during the downturn. But even if we stick in that southeast Queensland area, Gold Coast house and unit prices are at a record high. So what that means is Gold Coast house prices are now fully recovered from the downturn of 2022. It was a very mild downturn, really, that the Gold Coast saw, and unit prices at a record high, and it appears that unit prices have actually avoided any downturn altogether, and they just continue to grow.
That's interesting. Again, on the Gold Coast, while it's changed many years ago over the decades, it's changed from a holiday location to having its own industries and its own big permanent population. People seem to be more comfortable living in apartments on the Gold Coast than they are in other parts of Queensland.
Look, I think so. And I also think kind of the working remotely has changed those demographic trends that we saw as well. And I think, Gold Coast, certainly for the lifestyle, is up there, I think, on people's list of desirable places to reside.
Especially at this time of the year, Nicola, with you in Canberra and me in Melbourne and the cold weather. I remember in the old days, my grandmother used to go to Queensland every winter to get away from the cold weather here. I'm starting to feel that's not a bad idea.
I think that's a great idea too, absolutely. And there's some other interesting dynamics though across our different cities as well. And Adelaide is one of those continued strong performers. So over the June quarter...
It's been a quiet performer, hasn't it? It's been very consistent over the last couple of years.
It absolutely has. And there were some milestones really this quarter. So house prices surpassed 800,000 for the first time in Adelaide. And like other cities, we started to see that growth accelerate. But what it means for Adelaide is house prices just haven't pulled back. They've just continued to grow, but I would say at a more modest rate than what we saw during that kind of peak of the pandemic boom. And unit prices in Adelaide became the best performing capital city over the June quarter. We saw a massive jump in unit prices, and actually it was the biggest quarterly increase since 2007. So, overall, a very strong market now in Adelaide.
Yes. It's had consistently high auction clearance rates. It's a nice place to live. It's actually a big city, but nothing like the size of Sydney or Melbourne. It'll be interesting to see what migration does, because I recently read a statistic forecast suggesting that currently about 50% of Australians are living in our big three capital cities, Melbourne, Sydney and Brisbane. And that's up from about 47% a decade ago. But we know that Australia's got a business plan of growing our population to around 50 million people by the middle of this century. The government knows that it's got to replace the baby boomers in the workforce. It's got to bring in more skilled labour. And the forecasts are suggesting that moving up from 50%, there'll actually be 57% of our population still living in our three big capital cities. So while all the others will grow, and Adelaide clearly has lots of attraction, I guess a lot of the big jobs and therefore attracting people is going to go to the big areas.
Yeah, isn't that a remarkable statistic? And
very different to overseas, where in the United Kingdom, 50% of the population live in 8 townships, and in America it's actually 37 different big cities take up half the population. In Australia it's 3 cities take up half the population.
And really kind of logically, you shouldn't see the major capital cities continue to see an accelerating population growth. We really need to see that diversity also then being pushed to some of our secondary cities. Maybe it's Wollongong, maybe it's Newcastle, some of those other areas where then you get a more, you get that workforce that is more diversified in terms of the locations in which they are residing. So yeah, interesting stats there.
Now, interestingly, you were telling us about Adelaide, which has been a strong performer. What about Australia's capital, Canberra? How's that gone?
So Canberra is probably the latest, or the last city to find a price trough. What we've now found is that stability has returned to Canberra's housing market, and we found that a price trough was reached in March, and it's held at that price trough for houses over the June quarter. What we saw, though, is a phenomenal rate of price growth during the boom, and Canberra was one of the leading capital cities in terms of change in house price. But it also saw quite a substantial decline. So it was the steepest peak to trough that Canberra has ever experienced, and actually was the steepest peak to trough out of all of our capital cities. So it's about almost 12% now from its price peak that was reached in June of last year. So fallen about 140,000. Unit prices declined though over the most recent quarter. And I do think the thing with Canberra relative to other cities is Canberra's been very good at supplying medium and high density housing, and particularly higher rise apartments. And I think that is the factor that I think is helping to contain and weigh in a little bit more so on unit prices in the ACT.
Right. Now, Perth, that's done very well recently, hasn't it?
It certainly has. So house prices continue to rise in Perth, and Perth is one of only two capital cities along with Adelaide to be at a record high. We did see a subtle change in the pace of growth like we saw in other cities. That pace of growth over the quarter has accelerated. And I think what's amazing, though, about Perth is it has avoided any downturn. So we haven't seen a pullback in price. And I think that's really due to the affordability that Perth offers, particularly relative to the East Coast. It's been lack of supply. It's been favourable demographic trends as well. So what I mean by that is positive net interstate migration, positive overseas migration. So these are all helping to support housing demand in Perth.
Right. Now, the darling of the property markets for a couple of years, for quite a while, was Hobart, but it's had its share of challenges, hasn't it?
It has had its share of challenges, and Hobart, along with Canberra, was one of the two top performing cities during the pandemic growth cycle. What we've got, though, is we did see a fairly substantial decline for house prices in Hobart. They fell 64,000 during the downturn. They've recouped about 9,000 of that. So they are now moving into recovery. They're rising again. It's the first quarterly increase since early 2022. So it is a turnaround that follows 4 consecutive quarters of a decline. Unit price is a little bit different in Hobart. We know units are such a smaller segment of the market, and they have fluctuated. They declined again over the quarter, but we have seen these fluctuations over the most recent quarters. They're modestly lower than a year ago.
Now, you've left Australia's most affordable city to last in talking about the big capitals. How's Darwin going?
So Darwin is also rising. So we've got house prices increasing again over the June quarter. Again, we've seen a bit of fluctuation in pricing each quarter. We saw it grow. It regained most of the previous quarter's loss. But overall house prices do remain lower than a year ago. But as you said, Darwin is, Australia's most affordable city to purchase. Darwin was the only capital city actually not to reach a new record high during that pandemic growth phase. They still remain below that 2013 price peak, about $36,000 below that.
Now, we've discussed the big capitals. Capital cities have done well. Regional Australia did well during the pandemic for the reasons we know. And there's too many regional markets to cover, but they seem to be recovering, but not at the same pace.
So absolutely. The focus is certainly on our major capital cities at the moment in terms of the pace of growth. Generally speaking, as you said, we saw regional markets. They did fluctuate dependent upon the LGA, but we generally saw regional markets hold up better. They didn't overall lose as much price as our major capital cities. But what I would say, it does depend on the LGA. So generally speaking, the LGAs that have seen the most significant declines in price are in regional New South Wales, and they are the more expensive LGAs. So by that, I mean they are the LGAs that have got a median house price of, around that $1 million or more. So it's areas like Byron, median price of 1.4 million. They've declined by 21% over the past 12 months. But Byron property cycles are really rivaling Sydney property cycles at the moment. We've seen price point change so dramatically, and we saw such a big rate of gain during the upswing. Some of those other LGAs, so Kiama, Southern Highlands as well, and Wollongong are also all down over the past year. But I do think overall what we're starting to see now is a bit more stability and growth in some of these regional markets.
Now, we talked about houses and units around Australia, and in particular, those markets are dominated by homeowners, owner-occupiers, but investors play a significant role in their real estate markets. But recently, Domain reported that more investors are selling up. What do you think is going on there?
Look, I think it's an interesting dynamic of our housing markets at the moment because we've got a very, very tight rental market. Australia-wide, that vacancy rate is at 1%. But I do think the change of holding debt, the cost of holding debt, has significantly altered for some investors. And I think it is interesting. I was thinking about this before we had this chat today, and I was kind of thinking, if investors are selling up, they're going to be primarily in the areas that are largely dominated by rental properties. But I thought, also the buyer segment that could benefit from this are first home buyers because, while it's going to have negative impacts on our rental markets in terms of could tighten them further, the people that could benefit would be first home buyers because you tend to find that first home buyers and investors go for similar price properties. So if it is the more affordable end, I see this probably as good news for those looking to transition and buy their first home.
Well, as you said a short while ago, some renters are finding it too expensive and thinking, hey, why don't I get ahead in the property markets and buy my own home? We're hearing a lot of discussion about the impact of government policies on our property markets, and in particular, for the way investors are thinking. Have you noticed any change in the dynamics in the housing market based on some of these policy changes?
So look, I think this is always an interesting one. And I think, it's been really interesting. I don't know what your observations are. I just feel like housing affordability is so high on the agenda and it continues to be spoken about in government. And when you look at things like property tax, and in New South Wales, it was introduced for a very short period of time for first home buyers. It gave them choice whether they paid stamp duty or property tax, and it was, taken away as quickly as it was brought to market. And I think, those big ticket items, those policy reforms are really challenging, but I do think that they are gaining more light. I think about affordability a lot and how we can really change the housing landscape to better promote affordability. And I do think that they are challenging things to do. I do think that we need to see policy that really drives a greater, more efficient use of land. And that really needs to come from a federal government level. I think that we need to encourage states to reform land use and planning and zoning laws to really help boost supply and, make local governments much more accountable for those housing targets. Because, while we need to densify our cities, particularly along kind of growth corridor, arterial roads, we also need medium density housing in inner and middle suburbs. And as you know, it's really challenging to get that over the line because of that kind of NIMBY effect that occurs in some of these local areas.
Fully agree with you, Nicola. So the way we grew our cities by spreading out, by having freeways, by having highways, that worked last century. We can't keep doing this if we're going to increase our population to 40, 50, even 60 million over the next 60, 70 years. We are going to have to densify. The old way of growing didn't work. So there's going to be quite a lot of challenges for urban planners. There's also the infrastructure, not just the hard infrastructure, but the soft infrastructure we're going to have to be able to provide with hospitals and schools and things, public transport and things like that as well. So there's definitely going to be some challenges ahead in the long term. But looking ahead in the medium term, are there any key takeaways from your report for prospective home buyers, sellers, investors? What are your thoughts about the balance of 2023?
Yeah, I think the key take homes for me is for sellers out there, it is a good time, I think, in our housing markets. While we don't have price peaks across all of our cities, we've got consistently good auction outcomes. Clearance rates overall across our combined capitals are the highest since October of 2021. We've seen an acceleration of growth across our cities. There is still a lack of supply. And I think some sellers are actually coming to market sooner than spring because what they want to do is actually utilise that competition between buyers now. Because what you find when you get to spring, you're actually going to find the competition between sellers is going to start to rise because it's that natural increase that we see. So, I do think that thinking about selling outside of, on those shoulder seasons can be beneficial. And I think particularly when you've got selling conditions like this. But then on the flip side, for buyers out there, supply is starting to rise, which means there is a little bit more choice. And I think, while we can all get caught up with emotion and get very invested when it comes to trying to find the perfect home that we want to purchase, I think we need to also be mindful that waiting is also okay. Waiting for supply to rise. Supply is going to rise. It naturally does. It's seasonal and it occurs in spring. So, I think there's pros and cons on both sides. But I do think that at the moment, the conditions of our housing markets have changed very rapidly and for the better. And we certainly have seen conditions sway more in favour of sellers.
Well, there's so many news stories about what's happening to the housing market, what's happening to auction clearance rates. I think buyers and sellers, if it's for your own home, really should realise that you're buying and selling in the same market anyway. So it doesn't matter what's going to happen if markets go up or markets stay stagnant for a little while, not that that's likely to happen. The right time to buy is when you're ready, when your finances are ready, when it suits your family. And for property investors, you've missed the bottom of the cycle. You correctly pointed out, Nicola, that the signs were already all there at the end of last year. If the prices were falling, the rate of decline was going down, asking prices started to go up. And this year, auction clearance rates changed, in value sale prices changed. And as you said, depending upon which stage you're in, there's been a number of quarters and many consecutive months of rising property values. So again, right time to get in the market is when your personal circumstances will allow you to, if you've got good finances in place, if you've got a secure job. Don't try and time the market. Nicola, thank you for that really good discussion about what's happening to the markets around Australia. I will leave a link in the show notes to Domain's latest house price report, and I look forward to catching up with you again later in the year to see how the market has been performing.
Thank you, Michael. It's been an absolute pleasure.
I hope you enjoyed my chat with Dr. Powell. She gave us a good rundown of what's happening to the property markets in Australia. Now, if you're one of the many people who listened to today's show but don't currently subscribe to this podcast, just please stop for a sec and click the little follow or subscribe button on whatever podcast app you're listening to this, so twice a week you get the information that my guests have to share with you. And in a moment, I'm going to share my mindset message with you, but just recapping on what Dr. Nicola Powell said, if you look back at the last 6 months, the first 6 months of this year, you'll see how our property markets changed. And the story really started late 2022, as we said, where affordability issues, rising interest rates, falling consumer confidence led to falling property values throughout the year 2022. But at the end of the year, the rate of fall started to decrease, and slowly but surely consumer confidence or buyer confidence increased, and the markets started to turn with higher asking prices, and that eventually showed this year with higher sale prices. So no matter which data house you look at, the markets have bottomed quite some time ago, and we're at the beginning of a new property cycle. An opportunity like this doesn't happen often in an investor's lifestyle. So whether you're a home buyer looking to get in the market or an investor wanting to take advantage of this new property cycle, don't try and time the market, but if the timing is right for you personally, why not have a chat with my team at Metropole? We are much more than just buyer's agents. We help our clients grow their wealth safely and create intergenerational wealth through property. And it all starts with a complimentary clarity consultation, no cost. Go to metropole.com.au and have a chat with one of our property strategists to see what your options are. And we can talk about building you a strategic property plan, bringing your future into the present so you can do something about it now. And you can have the confidence that we're going to share with you frameworks that I've fine-tuned over 5 decades and we've helped clients with for well over 20 years. Looking ahead, 2023 is definitely going to bring us, the rest of 2023 is definitely going to bring us new and different challenges, but I don't think any future challenge is too much for the structured approach and advice that we give by helping our clients plan. Go to metropole.com.au. It'd be great to be part of your ongoing wealth creation journey.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I want to share a blog that was recently written by my good friend Tom Corley. Tom's the co-author of our great international best-selling book, Rich Habits, Poor Habits, and he was encouraging his readers to live a brave life. Tom said courage is admired by so many because it's possessed by so few. Tom went on to say living a brave life means not letting fear or uncertainty prevent you from pursuing your dreams. He said you gain the courage to pursue your dreams when those dreams become crystal clear. You need to be able to see exactly what it is that you want. And he said the crystal clear vision is all you need. Tom said when you can picture what it is you'd want so clearly, your subconscious will then go to work, even when you're asleep, to determine the actions you must take in order for you to realize your dreams. I've spoken about that before when I mentioned how your reticular activating system works as a search engine, but also as a GPS. Because Tom says your amazing subconscious will, through intuition, whisper in your ear the goals you need to pursue and achieve in order for your dream to become reality. So Tom went on again to say all you need is a crystal clear vision of your dreams. Being brave doesn't mean being reckless, however. Taking calculated risks reduces your overall risk. Calculated risks are risks you decide to take after doing your homework, after checking everything out. Those who take risks without doing their homework are obviously engaged in speculation, and that's reckless. But Tom said, live a brave life. And how do you know what you should be doing? How do you stop fear getting in the way? By bringing your present into the future and having a dream, having a crystal clear vision of what you want to achieve. Well, thanks for spending the last little while with me, and I hope you got some benefit from this show. If you did, and you know somebody else who'd also benefit, please tell them about the Michael Yardney podcast. There's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons down the bottom. Press it and share it, or just tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour, and you'll definitely be doing me a favour and helping me in my quest to make as many people as possible financially literate. Now, there's ways of catching up with me between these shows. Just look for Michael Yardney on social media, or why not join my private Facebook group? Go to Facebook and look for the Property Update Facebook group. And I have a way of saying thank you to you for subscribing to this podcast. Go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where you can get a bunch of ebooks and reports. My way of saying thank you. And when you've got time, why not listen to some of the old podcasts? There's individual lessons in each of those that I think would be helpful for you. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?